This conference will now be recorded.
Oh, the recording.
Watch it right now.
Okay, so we're recording and I'm working on my YouTube for it. So
Oh, yeah,
we're
I
working
forgot.
on problem 4-1. 4-1. And the first thing we did was to scratch out any non-cash transaction, and that was only 2. So we scratched 2 out. Now we're beginning to work with each transaction. So let's go back to number 1. We invested $200,000 in the company. That's a type 1. Where do type 1s go?
Part 3.
You go in part 3. So with the type 1, 200,000, it goes here. And as we said before, anytime the journal entry type is 1 through 6, it's a source. If it's 7 to 10, it's a use. Is that clear to everyone? Okay, so let's look at our next transaction where we scratched 2, we purchased 5 cars. And the way that journal entry would have looked would have been, we would have debited auto type 7, credited cash at 10 for 10,000, and credit note payable for 5, which would be a type 5. So we outlaid 10,000. And so when we put these in at the end of the day, we're going to show a net of 10,000 went out the business. So for the auto, we come in here and we put the auto journal entry 3, we put it in as a type 7, an investments, 50,000. Then with journal entry 3 also, we're going to come down here to part 3, type 5, and we put the 40,000 in. So once again, we're reading the transaction. We're going to our source document, which tells us where every journal entry goes once we identify. 2 through 5 short-term loans, short-term liabilities are in part 1. 7, 8, and 9 are in part 2 if it's a current asset or a current liability. 6 is sale of a long-term asset, that's in part 2. Purchasing a long-term asset is in part 2 as a use. Then journal entry 1 is a source financing, and so is journal entry 5 if it's a long-term liability. Payment of a long-term liability, journal entry 8 goes here, and dividends go here. So this chart tells you where each journal entry goes. So once you determine the type, you come to the chart, figure out where you need to go. So continuing to work with this problem, we have 4. What happened in 4?
Cash return revenue.
What type is that?
Type 2. Type 2.
This is the type 2. Where is it going to go?
Category 1.
It's going to go up here.
And the source amount.
So this is journal entry number what?
It's just 4.
3, right?
I thought you said 4.
This is 4.
Yes,
Was it
4.
4? Okay. 4. Journal entry number 4. And we said the type was what?
2.
2.
And the amount?
500,000.
500,000.
That's all we're doing. Let's go ahead and work the next one.
Just to clarify what you said earlier, did you say getting the type leads you to the getting the part?
Right.
Okay.
So what I've done now is just to I just have them side by side now, okay? So here's the problem. And then here is the answer template, and the types are above it here in terms of where they go. So let's move on to the next one. 5. What did you do in 5?
You paid the rent expense for $20,000.
Okay. So that's journal entry 5. And
Mm-hmm.
that goes here, right?
Yep. And it goes to use type 9.
Use type 9. What's our amount?
20,000.
Then we on journal entry 6 now. Same thing, we paying an expense, so another what?
Type 9.
Mm.
And what's our amount?
10,000.
Now we're all the way up to 7. Pay dividends. What type is that?
That's a type 8. Wait,
10.
10. My bad.
So we're on journal entry number 7. The type is 10. And the amount is what? 5,000?
Mm-hmm.
Yeah.
Then we go on to number 8. We paid on accounts payable, 1,200.
Wait, for number 7, what's the part?
3.
Okay, we on number 7. Pay the dividend. Type is 10. Amounts 5,000. What are you saying? Part 3. Does that answer?
Yep.
Cash flow financing.
Okay. So now we're going to journal entry what?
9.
We're on 8.
8.
Paid on accounts payable. What type is that?
8.
So we're at journal entry 8. That's the type what?
8.
8.
Is payment of a current liability. What's the amount?
1,200.
Number 9, what is that? Journal entry 9.
Type
It's a
9.
type 9.
It's kind of like a journal entry type problem. You know, there's only so many you're gonna have. And that's what, 2,000?
Mm-hmm.
Then the last one, we paid principal on the note of 10,000, interest of 5,000. So the entries of 5,000 is going to be go in the first part, journal entry 9 is paying an expense.
Unit 10.
That's
Unit
type
10.
So that's going to be a type 9. How much is it?
5,000.
5,000.
5,000. Then we got to go back and pick up this 10 as a note payable, so it's a long term. So we're going to come down here with journal entry 10 also. And this is going to be a type 8, but it's long term. So as a long term, it comes down here, but short term is up here. And the amount is how much? 10,000.
10,000.
Now we're going to do what? Total by parts.
Quick question. You said for the long term, short term, you said anything longer than a year is long term?
Correct.
Okay. Okay.
And what's our type for journal entry 10 on part 3?
Type 8. Payment of a liability, but it's a long-term liability.
So it's 8.
Right. So once
So I
again,
Go ahead.
you got this chart. I've got numbers in it here, but you got this chart that tells you where everything goes. So you look at the transaction, determine the type, then look on the chart, see where it goes.
So where does my interest go? I kind of missed that part.
Part 1.
Type 9, part 1, there's an expense. So now we're going to look at the net changes in each area. So we add up, going to part 1, we add up the sources is what?
500,000.
And how much are the uses?
38,200.
How much?
38,200.
Yeah.
38,200.
Mm-hmm.
Yes, sir.
So what's the net change?
461,008.
Or 61,800.
Yes, sir.
So this is a good company. Yeah, it's getting its money from operations, it's paying its bills and everything, and it has 461,800 stuff over. We go to the second area section. We only have what? One item. It's a use. So it's going to come over here what? In parentheses.
Parentheses.
What is that one entry in there? Sorry.
That's the purchase of the autos.
Okay.
Journal entry 3.
3
Okay.
types.
Purchase of the autos. So this is going to be parentheses 50,000, 000. Okay. And finally, in the bottom part, we told up the sources. How much do we have?
240,000.
And our uses are what?
15,000.
So that difference is what?
225,000.
So we add 461,800, subtract 50, add 225. What's our change in cash?
636,800.
636,800. Any questions?
Where it says beginning cash balance and less ending cash balance.
Don't
Oh, you
worry
said-
about
Okay.
it, because we
Can you-
started a new company. So you don't have
Can
to
you
worry.
repeat?
He asked
can-
about the beginning and ending cash, and I was saying don't worry about that because we're just dealing with a new company.
No, I asked, can you repeat how you got the change in cash again?
061.8 minus 50,000 plus 225. So we combine the three areas. So we add up cash flow from part one operations, which we like to see, minus the the 50,000 investment in part two, which we like to see, probably would like to see more, plus the 225 in part three. But we did buy a car, so a lot of the reason we have money there. So the total is 638. Any questions?
Yeah. So usually, well, I guess until the company shifts over to something where we're dealing with sales more often, usually the category two will mostly only be use instead of source. Is that a proper
Remember
assumption?
that we want it to be a use, because that means you're expanding. Just like when you graduate, you want money so you can buy things.
Right. So what happens if the source is the larger of the two numbers?
Then it comes in that way.
And then instead of subtracting that 50,000, you will be adding what's ever in there.
Yeah, you add it.
But wouldn't that be better for your overall, like your change in cash flow, if your change in cash flow is higher?
Okay. I've got two rental car locations, okay? One in Katy and one in Sugar Land. And my income is 150,000 from each one. Okay? 150,000 in Sugar Land, 150,000 in Katy. I sell the operation in Sugar Land. Okay? And I get $50,000 for it. So how much
But you lost 100.
Well, how much income I have next year?
150,000.
Right, because you show one of your locations. So when you start to see money there, that's a problem.
Because you're selling.
Yeah, you're selling locations rather than expanding.
Okay.
Okay, now for you all to work, I want you all to go ahead and work 4-2.
Wait, can you tell me where it's number 8? Sorry, my phone
8.
glitches. Yes.
Journal entry 8,
Yes.
right here. Journal entry 8 was paid on accounts payable. The type 8, and it's in the first section.
And so to be clear, if anything is in the first section, it wouldn't be all use. My first one, which was journal entry 4,
Source, yeah.
was a source.
Yeah. It just
So the
depends
sources
on.
would be like my expenses, kind of, right?
No, the source is where your money came from. You working somewhere and you got money. That's a good thing. You want sources of revenue. It's just like now, you feel good when you get a paycheck. You don't feel it good when you pay your rent. Got it?
Mhm.
So that check feels good until you pay your rent.
Yeah, that's a fact.
Okay, let's go on to 4-2. And I'm gonna turn the recorder off and let's see, you all have 15 minutes to get this work. Because you only have 2, 3, 4. Well, you got 10 journal entries, so you got 20 minutes. We say 2 minutes of journal entry.
Yeah.
So I'm gonna give you all 20 minutes to get this work.
This conference will now be recorded.
The YouTube channel.
Okay, continuing with problem 4-2. We paid cash. No, we purchased 5 automobiles for $20,000. So
That's
that's going to be what? A type what?
type 7.
That's okay. Journal entry 4.
What number are we on?
4.
Journal entry 4.
Oh, I'll see you.
And that's going to be a type 7
$100,000.
Uh-huh.
for $100,000.
And then we still on 4. We gotta take it to part 3, right?
Got to
Yep.
go to part 3. So we
Okay.
still on journal entry 4.
So that'd be type 5.
And that's a
Yep.
type 5 because we borrowed the money to finish paying this off. And we're going to owe that money.
So that type 5 would be 75,000.
Right.
Mhm. So we net back to the 25,000 we paid down. So we, our cash will be in line, but we're showing that we bought the autos for 100, and the bank paid 75,000 of it for us, and we're going to have to pay the bank back. So that's why it's over here as a source. Okay, let's go on to number 5, paid advertising expense. So that's journal entry 5. Paid advertising expense. So that's a type what? 9.
9.
9.
Yeah.
That's $8,000. Then for journal entry 6,
Type 2.
it's a type 2. So journal entry 6, we says a type 2. So since it's a type 2, it's going to be on the source side. And that's 150,000. Then number 7, we pay rent.
Type 9.
It's going to be a type 9. And so the amount of that rent paid was what? 30,000.
Yes.
We scratch 8. Number 9, paid on accounts payable 5,000
Wait, so why we scratch 8?
because it's earned. We didn't get the cash. That's a 15. That is not a 3.
Oh, scratch.
So journal entry 9.
That's okay.
It's a type 8.
Type 8.
And journal entry 9. Paid on accounts
Type 8.
payable. And so that's the type what? 8.
Mm-hmm.
5,000. Then collections of cash. So notice when we earn the cash, we don't put it on there. We wait till we collect it. Got it? Do we
Right.
see that now?
Yes.
Yeah.
Say that again.
Okay. When we said we earned the cash, we would have had a 15. The
Right.
important thing is not that we earned it, but that we got the cash. We didn't get 100,000 in cash. We only have 50,000 right now.
Okay.
Okay. And then what's the final one?
Type 10, 5,000.
This is journal entry 11. Type 10. So does everyone see where the issues are in and out? That is, you'll be ready for a quiz on Tuesday.
Why you keep trying to give us a quiz?
Yeah, I could do a quiz on Tuesday.
I could do a quiz on Tuesday.
If we
Good.
do a review on Monday.
Yeah, like
Yeah.
I need one more review session.
Today, or tomorrow and Monday, I'm good.
So we got 2,000 here. And how much our uses?
Why did we cross out 2 again? Because it was on account?
Yep. And this 45,000 right here.
Any transaction type that's not 1 through 10, we scratch out.
Oh, okay.
Yes, right. So number 2 was a type.
I thought 2 would have been a type. Why wouldn't it have been a type 7?
Because
It
it's
would have
on
been a
account.
type 11.
It would have been a type 11. It's a type 11 because it's on account.
On account,
First
right?
asset on account.
But it's okay.
But if it was with cash, it would have been a type 7.
All right.
So the virtual office hours do work fairly well. And it's, smaller number of people. As individuals say, sometimes you learn better then. So, make sure you're in there.
I still don't understand why dividends goes on the. So because we paid it out, we put it on.
You're paying the owner. When you got the money from the owner, it was a source. When you pay the owner, it's a use.
Okay.
Well, was our changing cash after all of this?
Wait, hold on.
Set
Wait.
175.
Oh, wait a minute.
What?
Yeah. My number was wrong. $175. Who's that noise?
Any questions?
Hey, so Professor Boyd, the change in cash flow, is that the equivalent of saying this is how much we earn for the year?
That's how much the cash went up. See, the key thing is that as you're looking to pay your bills, just like companies today, they got to have cash. So the fact that, it's fine that you did the work on account, but if you can't pay your bills, you're going to be in trouble. That's why the statement is there.
So the first thing we did was in the account. That investment was probably from an investor or it's basically a loan, right? So the money that we received from the change in cash flow, is that going back into that initial investment?
Yeah, this is a situation. This is your company, and you start with 50,000. At the end of the day, you got 175. So you paid yourself 5,000, and in your cutting, you got 175. So if you started out with 50, you ended up with 175. Is that good or bad?
That's a great thing.
Yeah.
Well, so
we have
now
to
at that point, it's just so at that point, it's just going to be a reoccurring cycle. Now instead of starting with 50,000, you're starting with 175,000. So it leaves room for expansion.
Yeah, that's when we get to this next, in the part where we looked at the cash, the beginning balance less the ending balance, and it still works the same way. But I'm glad you brought that up. I'll put a beginning and balance on that next time.
I'm here for you.
Look at you that did.
Right, ask too many questions. He was like that kid that always asked, "Hey, what about the homework at the end of class?" when people didn't do it.
Never, never was that guy. I'm more likely the kid that didn't do it, so I'm not gonna ask about it.
So, question: Was the investment amount deducted from another? I'm trying to see how we got the 175 still.
The 175 is how much cash you ended up with. You put 50,000 in the business, okay? Operation then generates you 155,000. You spend 100,000 on rental car. Borrowed 75 and paid dividends, and at the end of the day, you had 175,000.
Okay.
I think you can stop the recording now, Professor Boyd.
Yeah. Did you figure out the YouTube channel yet?